Today, we will talk about how to avoid self-employment taxes. Let's have a look at the details. People who are self-employed are required to send in quarterly estimated tax payments since tax is not withheld from their wages, as it is for employees. But if your income varies from month to month or year to year, it's tough to determine the amount to pay. You don't want to send in so much that you can't meet other expenses, or so little that you get slapped with a shocking tax bill at tax return time, not to mention underpayment penalties. This video will help you calculate your quarterly estimated tax payments to minimize your chances of incurring penalties or breaking your budget. Number 1. Base your payments on last year's earnings. You can avoid paying a penalty by paying at least the same amount in taxes as you did the previous year, if you were self-employed then as well. You can find the total taxes you paid on last year's tax return. Just divide last year's taxes into 4 equal payments and send each of them in by the IRS's quarterly due dates like April 15th, June 15th, September 15th, and January 15th. You should note that if you had no tax liability in the prior year, you won't incur a penalty for not making any payments before tax return time. You can choose how much to send in throughout the year, but be aware that you could have a large tax bill at the end of the year if you don't send in enough. Number 2. Get advice the first year. During the first year of self-employment, talk to a friend who's self-employed or hire an accountant to handle your tax calculations for you. Either way, you can figure out how much to pay, determine what expenses you can deduct, and get comfortable with the process. Number 3. Use separate accounts for business expenses. It will simplify your life and make it easier to estimate your quarterly taxes if you open a separate bank account and a credit card account reserved for business expenses only. These provide records of your business expenses for easy reference come tax time. It's much simpler than wading through a pile of paper receipts when you're doing your taxes, and it's much easier to check back through if a question about expenses comes up. Number 4. Keep a running tally of your income. You could get sticker shock next April if you don't keep a running tally of your income and pay your estimated tax accordingly. Calculate your income at the end of each quarter and use this as a basis for whether you should increase or lower your quarterly payments. If you use that dedicated checking account for your business income deposits, a running tally will take a couple of minutes to check your online bank records. You can check the description box for ways to avoid self-employment taxes course. Number 5. Use the IRS 1040-ES worksheet. If your income varies widely from year to year, the best way to estimate your quarterly payments is to use the 1040-ES worksheet from the IRS. The worksheet guides you through calculating your expected tax liability and takes into account certain common deductions you may qualify to claim. Number 6. Always overestimate, at least a little. Tax penalties can be pricey, depending on how much you underestimated your taxes due. There's a fine for falling short, generally around 0.5% of the amount owed for each month or part of a month the tax is not paid. Also, interest is charged on the amount you underpay from the day your quarterly payment is due until the day it's paid. And, number 7. Put the IRS tax helpline on speed dial. The IRS's free helpline is your best source for answering any question you may have. Unless you hire someone to do your taxes for you, you are your own accounting department. Unless you actually are an accountant, you may very well have some questions, at least during the first year of self-employment. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.